Hi everyone, welcome to another video by Optionables. My name is Saket, and today in this video we are going to look at what happened to the markets, what we can expect from the markets tomorrow, and what happened to our trade. So first, starting off with what happened to the markets. So yesterday US markets actually ended up rallying close to 3 to 4%. So Dow Jones was up almost around 3% and Nasdaq and all was almost up by 4%. The reason to this is because of the Fed rate hike. So now you might ask, Saket, isn't Fed rate hike a negative? Why exactly did the markets go up? So the reason to this is again pretty simple. When the Fed chairman gave a speech recently, so he was very hawkish on the market, and right after that the market started falling. So the thing is, they were expecting almost around 75 basis point increase, but rather we just got a 50 basis point increase, and this was a big positive news because market was factoring in almost around 75 basis points, and that's the reason right after this happened the market started to rally. So in US the rally almost lasted till the end of the day, and all the indices ended at the day's high. And this positive sentiment was carried forward to Asia. So in Asia also all the markets ended up opening around 1% higher, and so did Nifty, which again opened around 1 to 1.2% higher. Yesterday also we had mentioned in the video that Fed decision is going to be key for what exactly happens to the market, and since the news was positive, the markets ended up opening well above 16,800, which is also a very good psychological support. So if the market had ended above 16,800, then this price action would have suggested markets taking some support at 16,800. But rather what happened, the markets opened around 16,800, consolidated around 16,800, and not just that, markets also went up till 16,950. So it was almost up further 150 points after opening. But immediately we started to see a lot of selling. So the selling mainly came in banking sector and Reliance. So IT did very well today. Banking sector, Reliance and FMCG stocks, all of them witnessed a lot of selling, and the market started to crash. From 16,950 it initially came towards 16,850, and it sort of looked like markets might end up taking some support at 16,800, but once that was broken the market ended up crashing and almost ended at the day's low. So the day's low was around 16,650 and it almost ended there. So if you actually see the top losers, they include the FMCG sector as well as the banking sector, especially the big finance names like Bajaj Finance and Bajaj Finserv. So we will also discuss about why exactly these stocks will end up crashing if RBI increases the repo rate. So RBI increased the repo rate from 4% to 4.4%. When that happens, the interest rate in the economy goes up. Just to explain it in a very simple way, repo rate is nothing but the rate at which banks or finance companies can take money from RBI. So they can borrow money from RBI. So this is a very basic concept. But if we actually dig deep into it, so they will have to give securities and repurchase it later. So we'll just keep it simple by understanding repo rate is nothing but the rate at which RBI lends to bank and finance company. Before, the lending used to happen at 4%. But now the rate got increased to 4.4%. So if that happens, what will end up happening? Even Bajaj Finance or Bajaj Finserv or any other bank will end up pushing this cost to the customer. So if before Bajaj Finance was offering home loans at say around 10%, they will offer at 10.4%, just for us to understand the concept. So when the rates become from 10% to 10.4%, it will attract lesser number of borrowers. So people won't actually go and borrow money because the interest rate is very high, and that's the reason the sales will also come down. So this is one reason why the finance companies will get hit very badly, and the other reason why the stock markets get hit very badly is, so when the repo rates actually go up, it is not just the lending rates which is going up, it is also the deposit rate. If the repo rate increases, then on the fixed deposits or the savings account, so we will start getting higher interest. Once that happens, let's say now you are hardly getting around 3.5% interest from the bank. So let's say the repo rate increases quite a lot and you start getting 5% or 6%. So in your savings bank account, what would you do then? So you will remove from higher risky assets and you will start putting it in a safer asset, because bank itself is giving you 6%, so you don't want to take huge risk and you start withdrawing from risky assets like crypto, stock market and so on, and you will start putting it into a safer assets like FD and so on. So that's the reason even stock market will end up crashing if the repo rate actually ends up increasing. And that's the reason we saw a huge crash yesterday in Indian markets. So today's price action is also no better. Even though the market opened higher, went up higher than that, it was not able to sustain at higher levels. Immediately we saw some selling and the market closed at the lowest point of the day. So price action wise, it is very bad and the market was not able to sustain 16,800, which adds further bearishness. So Bank Nifty 2 broke its very important support of 35,500. It was unable to close above 35,500. So Bank Nifty is also in a very bearish zone. So now coming to what we can expect from the market tomorrow or for the next week, we are particularly very bearish until the market actually closes above 16,800. Till Nifty ends up closing above 16,800, we are bearish on the market and we continue to hold our short position. And we are expecting the closer targets to be around 16,300 or 16,200 in near term. If it actually ends up going to 16,800, we will end up cutting our position. So this is on one side. And now coming to Bank Nifty 2, we feel the trend is slightly bearish. It was relatively holding well up until last week. Because this rate increase came as a surprise, so Bank Nifty has also turned slightly bearish. So now coming to today's trade, we almost ended with no profit or no loss, hardly around 20,000 rupees gain, but that is more or less considered to be no profit no loss because everything will go for brokerage. So surprisingly, today we ended up in no profit no loss because of option buying. So before that we were at a loss of almost 4 lakh because the markets ended up moving everywhere. So if you actually see, market was moving 50 points, Nifty was moving 50 points as though it was nothing. So from 800, it was trading around 800, it went to 950, then came to 850, then again went back to 900 and again came to 800, again went all the way down to 650, from there it came to 750 and again came to 680. So it was moving 50-80 points as though it's absolutely nothing. But the bad part is premiums weren't pricing the same, and that's the reason algo system which we use got hit everywhere. So all 6 stop losses on all the sides got triggered and we were at a loss of close to 4 lakh. So now the thing is, somehow we had to recover the loss. If not today, it had to be recovered tomorrow or day after. So the thing is, we usually are comfortable risking 1 to 1.5% of our capital per trade. So that means the total risk what we could take is around 5.5 to 6 lakh total. So now we already have a loss of 4 lakh, and right then the markets also ended up breaking 16,800. So I was looking at this and I was pretty bearish on the market, but everywhere the stop losses were triggered and I was having a loss of 4 lakh. So I thought, okay, anyways, we still have some risk appetite to take. Maybe around 1 to 1.5 lakh is something we can end up risking. And since market had broken 16,800, I was very bearish on the market. So that's the reason today I actually ended up doing out of money option buying such that my maximum risk would be just around 1.5 lakh. So I had lost 4 lakh. In case if this option had ended at 0, then I would be losing another 1.5 lakh, totally at 5.5 lakh. So I looked at the price action. I saw that the markets were quite negative. European markets had opened well over 2% higher. Even these markets were witnessing a sell-off. So I had a conviction, maybe we might end up back at 16,700. So this was what I thought, because yesterday also from 16,800 to 700 market took 0 support, and that's the reason I thought maybe we can come towards the yesterday's low. And that's the reason I ended up purchasing 16,750 put option, almost around 15 to 16 rupees. When it was trading around 15 to 16 rupees, I ended up purchasing 8,000 quantity. So even when you do the math, 8,000 into 15 rupees is around 1.2 lakh. That means the maximum loss that what I will be having would be 1.2 lakh. So now you might ask me, Saket, why exactly did you end up buying the option instead of shorting the option? Because we usually only sell options, right? So I will tell you the logic also why exactly I did that. The thing is, if we had to recover the loss of 4 lakh, I had to make it big. So the thing is, I was only ready to risk around 1 lakh, and on the other hand, I wanted to make around 4 lakh just to recover the loss what we had. So if I had to recover 4 lakh by selling options, let's consider out of money. So if I had to sell out of money options and recover this 4 lakh, then I had to sell 10,000 quantity of some option trading at 40 rupees. That means mostly at 40 rupees means you will only get at the money options, and that was a huge risk which I was not ready to take. So now coming to in the money, maybe let's say I had to sell something trading at 80 rupees, 5,000 quantity. Let's consider this. I end up selling something trading at 80 rupees, 5,000 quantity. The only problem is, let's say it starts to go against me. The delta will be close to 1, and that's the reason if it starts to move against me, then I will start losing 1 point for every 1 point. And the risk associated with that is much higher. In option buying, all I know is in the worst case, I will end up losing 1.2 lakh. But the probability of me being right is very slim. So I can't be right most of the times, but the probability is very slim. And if I had to recover such a huge amount, it was not possible by selling OTM options because I had to go huge quantity, and going huge quantity with OTM is not easy. So generally we don't do this, but today we ended up buying options because we had a strong conviction that the market is going to go down. And that's the reason we ended up purchasing 8,000 quantity at almost 15 rupees with a max loss of 1.2 lakh. Post that, the market started to crash, and luckily for us, we ended up squaring off these options somewhere around 65 to 70 rupees. So we made a good 50-point gain from this in buying options, and 8,000 into 50-point gain is somewhere around 4 lakh. So whatever we had lost on the other side, we ended up recovering by buying options today. And this also made a high of almost around 95 or 99, but we squared off as soon as we recovered our loss. So one thing what you should note here is we won't be shifting to option buying because today we were lucky, we ended up making money, and markets went as per our favor, we ended up making money. If the market had gone against us, so there is no way to adjust this buy position. I can't do anything to end up adjusting this buy position. So this 15 rupees would have gone down to 0, and I would have lost 1.2 lakh, and I would have ended with around 5.2 lakh negative. So just because it went in my favor, we ended up recovering. So that's the reason we usually don't do option buying, and today we did it, but definitely we won't continue doing option buying because the probability will be extremely low, and once it starts going against you, hardly you can do anything to adjust an option buy position. So this is something which I wanted to tell you because generally you don't see us do option buying, and today we ended up doing that, and that actually helped us recover whatever we had lost through option selling. So this was more or less the entire trade summary which I ended up giving you. So today we won't be doing any sort of open interest analysis. The reason is quite simple. For tomorrow, the strikes wouldn't be actively traded today. So we will wait for tomorrow to do further analysis with regards to open interest. And market outlook is something which I have already told. We are bearish on the market up until it crosses 16,800, and we have also shorted 1,000 quantity of Nifty futures. So with this, we also come to the end of this video. If you have liked this video, don't forget to hit the like button, share this video, and subscribe to Optionables. Thank you so much for joining.